It's time to join Montana's very own and your voice for agriculture, Talkin' Ag Lane Nordlund, for today's Lanecast.
Hey everyone, welcome back to the Lanecast Ag Podcast. Here today, we're actually having our conversation from the Matador Ranch in Dillon, Montana, southwest part of the state. And joining us here today is the one and only Dr. Derrell, agricultural economist there from Oklahoma State University. And it's just, people are probably wondering, why are these guys at the Matador Ranch? and just in a big barn that's an office. But for our audience members, we actually were participating in the field day for the Matador Ranch.
That's right.
You were one of the moderators and speakers, and I was lucky enough to MC the event.
Right.
And so, great event here.
It was a very nice event.
A lot of folks from all over the nation here and the region, just learning what the Matador is up to, and very, very interesting day.
Very interesting day, very interesting locations. My first time to visit the Matador Ranch, and so fantastic operation, a lot of history, and you know, it's interesting because you're combining a lot of very fascinating history and traditions that come from this region, as well as some absolutely cutting edge approaches and thoughts about where we go from here in this industry. And so nice mix of all of that.
It was, and obviously it was a Friday and towards the latter part of the month, and we had a cattle on feed report come out about this afternoon as well. But you know, there's just so much going on in the cattle business. And
that's for sure.
You and I had breakfast this morning at the hotel, but there's just so many factors that are impacting the cattle business. A lot of people just say, well, it's drought.
Yeah.
Well, there's so many other things that play here
that's
too.
Right. Yeah.
What, you know, for our audience tuning in today, what are some of the things that you have been paying close attention to? We'll get into those cattle on feed numbers here in a second, but what are some of those key things that you are watching that really could impact more of the cow-calf sector, since that's a bulk of our audience?
Yeah, well, you know, and that's kind of the level where the market is really driving right now, you know, being driven by right now. We find ourselves with multi-decade lows in cattle inventories. We didn't plan to be here, so it was largely drought that got us here, and it was drought all over the country this time, which is a little different than something we've experienced before. But then in response to that, of course, supply and demand does work. I'm going to argue that as an economist. And so, you know, we've got record high cattle prices. We've got lots of dynamics going on in this industry of all the sectors. Everything above the cow-calf sector is a margin. We had some talk today in some of the panels about margin compression that happens at this point in the market. And so there's lots of opportunities and challenges for folks. And then, of course, beyond the cattle industry, which has just this incredible strong fundamentals, both supply and demand, that are driving things right now. But then we've got this broader political, economic, global economic, geopolitical environment, all of those things that are just adding so much more uncertainty and volatility in our markets. And so, boy, it's a big package of things that we're trying to keep an eye on right now.
And so when we look at that, some of the conversations today is, what is the market, where is it headed for the next 2 years? You did a poll of who's maybe retaining heifers. Not as many people put their hand up.
Not too many here.
They're a little cautious. They're a little cautious. I think they're going to wait till maybe preg check in another month to see what the drought situation might be. But, you know, on that topic, let's focus maybe on that rebuilding. Then we'll talk about the markets. What are you seeing? Obviously, we saw CattleFax a few weeks ago come out and say, yes, herd rebuilding is happening in pockets. I talked with Matt McQuaig with CattleFax just a few short weeks ago at the Montana Stock Grower Summer Meeting where he spoke. What are you and your researchers looking at, and what are some of those regions where that could be taking place?
Yeah, and I would tend to agree with that. I think there's been, you know, it's been a slow process to not only get some of the drought issues out of the way, which was a limiting factor, but then probably more fundamentally is to get producers sort of a mindset to think about herd expansion, and that means some heifer retention. I do think it's beginning to happen. I think it's kind of growing, but it's still, I believe, in a fairly slow process. We don't have any data yet to confirm that, but we only get that data once or twice a year. So we don't really know for sure. We're starting to see some indications with the heifer on feed numbers. The first indication was in April. It's a quarterly number. So we'll be watching that July number. That might be our strongest indication yet if it comes through that the heifer on feed percentage continues to drop. But the bottom line is I do think it's happening in some areas. In the southern half of the country, really the southern plains and then points east of there, we've had a lot of improvement in just forage conditions. We've had a lot of rain. In fact, right now we've got arguably too much rain, although producers are very reluctant to criticize rain everywhere, ever. But, it's slowing up wheat harvest and it's slowing up hay production. But we've got forage, we're growing forage, and so producers that have been thinking about some heifer retention and some restocking and some rebuilding, I think some of that's beginning to happen. The northern plains, it's still pretty tough up here. We've got marginal drought conditions. It's early enough in the year. The drought threats are very real. So I don't think anybody wants to step out there and be too aggressive at this point in time.
And really, even if they are holding back a few heifers, it's not a normal retention either. But how many years really could it be if folks are slowly trying to retain those heifers? Because they're going to fall out too with breed back and all those factors that come into raising a calf crop and breeding heifers and rebreeding those first calf heifers too. Ideally, if drought started to go away, what is that time frame? And I enjoy asking all the folks that I talk to that study this. In your mind, what is the time frame on a rebuild if conditions started to get right now?
Yeah, even if we get ready to start now, I believe it's going to be a slow, extended process, and it really has not so much to do with where we are now or even what happens going forward. It's everything that's led up to this. And really in my mind, and I think in a lot of producers' minds, we're still kind of comparing today's situation, both prices and overall conditions, to what happened a decade ago. Yeah. And, we did a very fast rebuild from 2014 to 2019. But the key to that was that we had been building a heifer pipeline for 3 years prior to that. And we have not been able to do that.
So as we look at that pipeline of having those heifers ready to go, that's one thing we can do in the cattle businesses. When we know we can rebuild, we can do it pretty fast, and we can get a little greedy.
Yeah, well, and that's what happened in that time period. Because if you look at the underlying cattle cycle, absent the drought, the conditions were there for herd expansion. I went back and looked up one of my old weekly newsletters. Sometimes that becomes kind of a diary of what I was thinking and saying back then. And I found an article, I believe it was from 2010, saying, I think we're getting about ready for a little bit of modest herd expansion. Well, then 2011 came, the drought was on in Texas and Oklahoma. All bets were off in terms of what happened to us, pulled the whole country down. And I say all that to say, again, the rest of the country continued to act like they were ready to rebuild a bit. Yep. They did develop a heifer pipeline so that when conditions in the drought areas did improve, boy, we were ready to go. That contrasts with where we are now, because for the last 3 years, we've continued to slaughter heifers aggressively. We have no heifer pipeline. We brought in the smallest number of bred heifers that could enter the herd this year. We also brought in the smallest number of the data we have available, the smallest number of heifer calves that we said we were saving to breed this year for next year. Mm-hmm. Now, we can always breed some additional heifers. In fact, we always do. Those come out of that other heifer category in the annual inventory numbers that would normally be feeder heifers, but we may decide to breed some of them. And I think we're probably doing a little bit of that, but all of that to say that we're starting essentially from scratch.
Yeah.
So think about it, if we're starting with 2025 heifer calves, we can save them now, we can breed them in 26, they calve in 27. We're talking late in the decade before we really start changing beef production, and I think that's about the fastest timeline that we're on at this point.
And I think a lot of people are sure curious, especially those that maybe could start to develop heifers. Maybe they're the ones looking to buy those heifer calves that folks are selling. Maybe they're staying in a state, maybe they're going several states away. But think of that opportunity, though, if you have those heifers when I don't want to say the bubble pops, because that's not maybe the right way to describe it, but the day that rebuilding does begin, that's going to be a lot of money on the table for folks that do have cattle to sell.
Yeah, well, absolutely. And producers have been trying to anticipate this for at least 2 years. I know of producers that thought this was, and I honestly thought we would start some rebuilding sooner than we have. It could have happened as early as late 2023, didn't happen. Could have happened in 2024, didn't happen. But there were producers as much as 2 years ago that were trying to time themselves to have those replacement heifers ready to sell when the market took off, if you will. And they've been a little frustrated in some cases that it hasn't taken off yet. And I'm not sure it's going to take off in a really pronounced, sudden way. I think it's going to be more of a slow growth kind of a prospect going forward. So the market's going to build, and I think these breeding animals are going to get more valuable, but I don't know that we're going to see a massive surge in the market, if you will, again, kind of like we saw about a decade ago.
Now, this week, a lot of cattle sold on video auctions. We had Superior's Corn Belt sale, we had Northern Livestock video sale yesterday and wrapped up today. And it's really cool seeing pictures of cow-calf producers with smiles on their faces. And truly, I almost get a little emotional talking about it because we know the struggles that it takes to stay in business, keep these operations going, family businesses viable. So to get a price that we could never have fathomed. And obviously it took a drought in the size of the herd to get to this place. But we also think of way back in 2015-16 when we were at these same auctions and the prices started to fall off. And I'm not trying to be the Debbie Downer here today, but Evan Slack, the founder of Western Ag Network, he always said on his radio reports, if the prices were up, he'd say they're higher. And I enjoy saying that today. But as we look at these situations, there's a lot of factors on the table right now. We have New World screwworm, present in Mexico. We have a lot of geopolitical issues popping up right now too. And I'm ecstatic for these prices. Everyone that's getting their contracts in right now, those maybe that are waiting a little bit, maybe getting a later summer, maybe this fall. What are you watching maybe on this scene here in North America and Central America with the screwworm, but how could maybe these geopolitical issues impact beef? And again, I'm not trying to be a Debbie Downer, it's just we're seeing a lot on the news right now.
There is a lot of news. It's kind of a headline-driven market that we're in these days, and that's in and of itself, that's a bit of a negative. It's not good for anybody to have that uncertainty. It makes it hard for everybody to sort of make plans and know where to go. But given the supply situation in the U.S., the feeder supplies continue tight. And we've actually been through, if you think about it, over the last 18 months, we've had 2 or 3 of various kinds of shocks that have caused the market to pull back very abruptly, but very briefly. And I think that's kind of the key to this thing. Again, I mentioned this morning in our panel that there's kind of a contrast between where the beef industry is right now with this incredibly strong set of market fundamentals in contrast to this very uncertain, volatile, broader economy and global economy situation that we're in. And so trying to reconcile those two is a bit of a challenge, but what it boils down to is that outside stuff may have impacts on us, but barring something absolutely catastrophic, it's going to be fairly short-lived because these supply fundamentals, along with the strong demand that we continue to see in the beef industry, just make it. I've told people before several times here recently that the cattle industry is pretty bulletproof right now. I don't think it's bomb-proof, but it's bulletproof, and I think that kind of characterizes it a little bit. We're very strong, and so that uncertainty then becomes a short-run risk factor for producers. And I remind producers that, we're still pretty bullish. We still think cattle prices are going to go higher, even from the record levels that we are now, because we haven't started saving heifers very much yet. But at the same time, you don't sell cattle on the average. The annual average might be higher, but you sell cattle at a particular point in time. So you need to think about those marketing windows, think about whether you're going to have the flexibility to move around those a little bit, because again, a short time frame can make a lot of difference. But if not, then you need to really focus on the risk management associated not with the broader market, but with your particular market situation. And I think, we're up there at levels that are just almost breathless, and there's a lot of air underneath this industry. I'm confident with where we are, and I don't see that there's a lot of general downside risk, but the short-term risk is pretty considerable right now.
And just a few hours ago, while we were here in Southwest Montana, that June 1 cattle on feed report was released. Just breaking those numbers down, 11.4 million head of cattle on feed as of June 1st, down 1% from a year ago. May placements coming in at 1.89 million head. That's actually 8% below the 2024 report, and marketing's down 10% from last year at 1.76 million head. What's your read on this report?
Well, it's really a continuation of what we've been seeing for the last year or more. Feedlot inventories are down by about 2%, and we've been down that for about 6 months now. But honestly, if you had asked me 2 years ago, I would have said feedlot inventories were going to be lower significantly now than we have seen so far. Feedlots, obviously, they're volume businesses. They're running a feed mill, and so they need something to feed to. So they're trying to maintain numbers. And so we've done lots of things in the industry over the last 18 months or so to keep feedlots full. I liken it this way. I say a feedlot is like a water tank. And you got a pipe coming in, that's placements, and you got a pipe going out, that's marketings. And even if the placement trickle is dropping, and it is, we've been placing less cattle on average for about 2 years. But if you slow down the rate of outflow, you can keep that tank full for a longer period of time. I think that's exactly what we've done. And again, feedlots have an incentive to do that. We've slowed down the rate of turnover, so we've extended days on feed. That's made cattle bigger. There's all those carcass weight implications that go with that. And again, up to this point, we've continued to feed heifers. If we get to a point where we stop feeding as many heifers and keep some of them for herd rebuilding, and the advantage you get from slowing down the rate of turnover only goes until you got everything slowed down. Mm-hmm. It helps you while you're doing it, but once it's all done, then you're sort of back to where you were before. Yeah. And so I say all that to say that I still think that we're going to see a significant decrease in these feedlot inventories. And I think part of the industry maybe has focused on those feedlot inventories and really doesn't appreciate the fact that underneath that, there's an increasingly hollow supply of feeder cattle in the country. We're sort of emptying it out and masking it. And when it becomes apparent just how empty that feeder supply is, then I think we're really going to see a lot of squeeze in these markets. That it's there in the record prices that we have today, but it's going to become more obvious and more pronounced as we go forward.
When we look at these cash markets too, when we're looking at these fat and dress prices out in the countryside, they just continue to climb higher. But it was so interesting this week watching the futures market. Again, this is the week ending June 20th on a Friday.
Right.
I mean, we saw fundamentals that were perfect.
Right.
Fundamentals are there, but then we see the feeders down $6 as well. And for so many cow-calf guys, it's just like, I don't get it. And there's so many folks that they watch the cash or they only watch the futures.
Yeah.
And in your mind, why are we seeing such disparities in a correction, I guess, if we want to classify it as like that?
Yeah, well, again, I think that's another example of this kind of short-run volatility, and part of it is just kind of the nature of things. We've had a strong run-up. Mm-hmm. We know, especially in the futures markets, we're going to see corrections. There's just, people changing positions, taking advantage, pulling some money out of the market. Some of that's temporary. Some of it's headline-driven. We've got some geopolitical events going on this week that has spooked the market. It's impacted energy prices and some other things, and cattle markets tend to be pretty closely associated with equity markets, so stock markets. But we also find in recent months that connection is maybe not as close or as direct as it often is. And again, that speaks to the fact that the cattle market's got this unique set of fundamentals that we're working in. So we're a little bit isolated from that stuff, but certainly not totally. And so, we're going to continue to see this kind of short-run volatility. I got asked, probably a month ago, there was a big key top in the futures markets. And several people asked, is this it? There were certain trader types that were saying, this is it. This is the cyclical peak. And I said, no, can't be. Absolutely not. And it wasn't. Within 2 or 3 weeks, we were right back up there. Now there will be a top someday. I don't know that it's going to be as pronounced a top as what we experienced 10 years ago, but I think that's still one of the hurdles we're facing with producers. Yeah. You mentioned earlier that producers, first of all, have incurred a lot of expense and stress and strain through these droughts and so on, and it's been a long time to heal that up and get them to a point where they could think beyond the short run kind of financial situation they were in. And then they remember what happened 10 years ago. And I think all of those reasons, combined with continuing and lingering drought threats, and those things all add up to a package of stuff that explains why this response, if you will, to the market has been slower and more measured, and I think it will continue to be, which probably means it's a little more sustainable going forward.
Yep.
I don't think we're looking at a pronounced peak. That hopefully that means we don't have a real pronounced backside to this thing. Again, there'll be a top someday, technically, but it might be more of a plateau here for the for much of the rest of the decade as we go forward.
So interesting. My friend that runs the tech side for the Northern Livestock Video Auction, he texted me that they had yearlings bring $3,000 today. And so he actually said, and obviously I'll be honest, I did not watch the sale today because we've been busy. Russell Nimitz with Western Ag, that was his job to watch that sale today.
Right.
But they sent over the official averages. 44,146 head of steers sold and 19,218 heifers.
Yeah. It's a little different ratio.
A little different
maybe.
ratio.
Yeah.
I mean, maybe they're holding them for another sale because, we watch those heifers come up in the fall.
Yeah.
But just for our audience members joining in here today, I'll throw some prices out there. 4 to 4.5 weight steers, they averaged anywhere from, they were 506 straight across, 4.5 to 5 weights, 405 all the way up to $4.57. Whew, sorry, I dropped my phone. I'm losing my breath here. 5 to 5.5 weight steers, 378 to 433. 5.5 to 6 weights, 356 to 410. 6 to 6.5 weights, 337 to 398. 6.5 to 7 weights, 338 to 380. 7 to 7.5 weights, 336 to 369. I'll put the entire averages on the screen there in the post edit for us. Heifers, we're anywhere 15 to 30 back.
Yeah.
That's just I don't even have to read those. That's just that's where we are because there's a lot of money on the table with these steers right now. But looking at this, it's fun to read these numbers.
It really is.
And, I have had viewers reach out to me saying, "What you're so enthusiastic, you're going to drive people away from eating beef. That you're just going to drive demand down." I've had ranchers reach out and tell me that. But the numbers show beef demand still remains high.
It really has been remarkably resilient. We've been watching beef demand ever since the COVID period for potential problems. As we've continued to generally move higher and sharply higher in the last few weeks especially. But the demand has been resilient. I watch a lot of the wholesale cuts. We talk about consumers trading down from the highest end products to lower value, or more value-based products. And we do see a little bit of that in there. And of course, the other thing the one area that has really changed dramatically in this industry has been the decrease in cow slaughter this is the third year really. And so, we've had that sharp drop there. Cull cow beef, the 90% lean trimmings is really the main backbone of our ground beef market, and so that market has tightened up. And honestly, if you look at it, ground beef is not really the go-to market when other stuff's expensive. It's relatively more expensive for what it normally is than the other products because that's been so tight. Again, we haven't really seen overall beef production drop as much yet as we will going forward because, again, we've continued to feed and slaughter heifers. And we've added carcass weight, so that's added tonnage to the market. And so going forward, I think we'll see overall beef production drop a little more sharply. And then it's going to hit everything, and we will see we'll see some adjustments, and obviously there won't be as much beef at that point. So consumers, will make some different decisions, and we'll ration a smaller supply a little bit more. But the bottom line is beef demand has been remarkably resilient. And when you talk about consumers turning away from beef, if they wanted to turn away from beef, we've had, extremely attractive competitor prices in pork and poultry for the last 2 years.
Yep.
And yet we haven't seen consumers turn away from it. So barring some big macroeconomic thing that affects consumers, unemployment, more inflation, or, just generally higher prices, energy costs, those kind of things, that could change what they can do as opposed to maybe what they'd like to do. So that's a threat. That's that external environment that we're working in. Internally, beef demand and beef supply both continue to be extremely supportive.
In the dirty word, imports. for so many producers. When they hear the word imports, they get frustrated. They ask, why aren't we using our lean beef to go into there? You track the numbers, whether it's the beef demand, import numbers, export numbers. People ask, why are we exporting our beef when we have to import? What is your response to people when they bring up that talking point?
Yeah, that's probably been the biggest question I've had over my entire career is why do we both import and export beef? And the answer, you can say it in one sentence, and that is beef is not one thing, right? This beef, cattle producers produce cattle. But ultimately, that animal, when it goes through harvest and fabrication, becomes, and ultimately this industry produces thousands of different products. And our consumers in the U.S. have preferences for certain products. We don't like some things as well as others. In other markets, they have different preferences. And when you look at what markets do, whether it's a domestic market locally or whether it's an international market, market's job is simply to find value. It's to match supply and demand for the highest value. And so when you look at that array of products that we produce, and the fact of the matter is cattle don't produce exactly the set of products that consumers in the U.S. like the most. And so exports and imports both actually add value to our industry because they help us sort out stuff that, it has, if it's an export and it has more value in an export market, well, that's the American way. That's the market system at work. On the import side, there are things that we can import and supplement certain parts of our market more economically than we could do it ourselves. And then there's products that we simply, I like to remind people that if most producers eat their own beef, they have freezer beef. But if you have freezer beef, there's a point in there where you get down kind of in the bottom of the freezer, and there's always a handful of products that you really don't like as much. We ate all the steaks, we ate a bunch of others, but there's a few things down there that's kind of the last thing we get to. We kind of want to go get a new one, and somebody in the house reminds us, no, we better eat that stuff before we do it. That's what happens if you don't export and import, is you don't match up those product mixes correctly. So, beef exports obviously add value because we're selling it into a market where it has more value. But critically, beef imports actually, first of all, they make our fed cattle worth more because they provide the lean that allows us to utilize the fatty trimmings off of fed cattle and support our huge hamburger market. If we didn't like hamburgers in this country, it'd be a totally different situation, right? So that's a big part of that. Otherwise we export things we don't like as much, but we also, could we do it without imports? That's a question. Why don't we just use our own products? Well, we could, but we would be grinding up stuff to make ground beef to support that market that has more value if we don't grind it. So we can find processing type beef in other markets. That adds value to the industry, and it helps us not have to eat that stuff that we don't like as much. And so that lets our consumers focus on spending their money on the products they most want to spend their money on, as opposed to eating what we have and actually reducing the total value mix to domestic demand. So it's not just about the international component; it actually affects domestic demand as well.
Yep. People just keep sending me all these averages from the northern sale. But when we look at this too, the last area I want to touch on, because I know we've had a long day and I want to let you kick your feet up here shortly, but is that conversation around beef on dairy. And what are you watching on that, and how interesting is it, and what impact is that currently having, and what it could have, just depending on if conditions were right for the traditional cow-calf producer raising beef cows?
I think the beef industry for the first time is paying attention to the dairy industry, and ironically the dairy industry for the first time is paying attention to beef markets. One of the things that I found interesting over the last couple of years is a lot of beef audiences, usually there's a question of, well, what are we going to do with all these beef on dairy calves? The implication sounds like there's a bunch of new cattle out there we've never had before. So I remind beef producers, those dairy cows have been having calves every year. And all of the male calves were coming into the beef supply, and all the cull females were coming into the beef supply. So we haven't really changed the overall animal numbers that much. Now, there's certainly some meat market implications. That's the reason why the crossbreds have value to that industry. And you can argue there's a little bit of difference in carcass weights, but it's really not that phenomenal. And so it's not so much about changing the overall beef supply or anything else. Now, there are some interesting implications. This isn't going to go away. And it's kind of I hate this phrase, but I'll use it. It's kind of a perfect storm, because you have the technology, the sex semen technology, that allows the dairy industry to do this and target the heifer production that they want. At the same time, we have the market conditions on the beef side that makes these animals to the dairy side extremely valuable. So much so that the dairy industry is actually not producing enough replacement heifers for their own industry. And I actually have a graduate student working on that very question right now. There's going to be some longer-term adjustments to sort of rebalance all of this stuff. I think the dairy industry could be affected long-term, and the beef industry to a limited degree as well. But these animals are here. They're part of the supply. They look more like beef animals, so they seem like a lot more new animals, but they really aren't. It's just it is a unique component of the technology that we have now to do this on the dairy side.
Well, there's a lot going on in the business.
I tell you what, this is, I've argued for years, the beef industry in the U.S. is probably the most complex set of markets on the planet. And it seems like for the last several years, but especially now, so many things are moving at once. It's really hard to sort of get your hands around the net effect of all of this stuff, because so many pieces are moving at once. And that's a source of stress for producers. It can be frustrating. It can also be kind of exciting, because there's lots of opportunities in this thing. And right now, the best part about it, as you've said, is that the market is trying to tell these cow-calf guys, we probably got smaller than we need to be. And so these price levels are trying to encourage some herd rebuilding. We will respond to that sooner or later. But I think if we do it in a more slow, controlled fashion, we can preserve this kind of market environment for a longer period of time.
And that's what people want to hear. Well, again, Dr. Peel, thank you so much. I guess, what is just one last thing, maybe on risk management or anything like that, you would just like to share with our friends listening or tuning in today? There's a lot of opportunity at the cow-calf level. I do think you still need to think about risk and think a little bit longer term. I think, again, we've been caught up necessarily with drought impacts and financial impacts and everything else. We've had a fairly short-run mentality, and I think we are at a point now where we can afford to think a little bit longer term, figure out how to take advantage of it depending on where you are, what your resource situation is, how to take most advantage of that market. Some of the other parts of the industry, they're going to depend on what you do. All the supply in this industry comes from what the cow-calf guys decide to do. And so they're in the driver's seat right now. We're going to enjoy it as long as it lasts. Well, again, thank you so much for taking a few moments, and have fun driving up to Northwest Montana to see family. I'm
going to go enjoy it very much.
Well, and of course, I should mention he does have a degree from the Montana State University there in Bozeman.
2 degrees.
2 degrees, that's right. Go Bobcats.
That's right, absolutely.
So again, thank you so much for joining us here today.
Absolutely, glad to be here.
And with that, friends, thanks for joining us here on the Linecast Ag Podcast and joining the agriculture conversation. Make sure and subscribe and follow our smorgasbord shows. We never know what we're going to talk about. It could be 5 minutes talking about New World screwworm or canola, or we never know what it's going to be, or it could be a longer conversation like this. So thank you so much for tagging along with us. Make sure and follow along all of our Western Ag Network social media channels. And again, thanks for joining us, and stay safe and healthy out in the countryside. I'm Nordlund. We'll catch you next time.
Thank you for tuning in to the Lanecast with Talkin' Ag, Lane Nordlund. Don't forget to subscribe to the Lanecast on your Apple or Android devices. We look forward to joining you next time on the Lanecast.